Ladies and gentlemen, boys and girls, welcome back to Finance Tube. Your friend and finance guru Vishal Thakkar is back again with one of the most comprehensive, freshly baked, hot topic on your table called Income Computation and Disclosure Standards. Yes, ladies and gentlemen, the Institute of Chartered Accountants of India, the body of IFRS in UK were not sufficient to issue accounting standards. Now our own homegrown income tax department has joined the bandwagon, and congratulations, they have issued us 10 new accounting standards. Hey, what are you talking about? 10 new accounting standards? We already have 41 to comply with. Technically, yes, there are 10 new accounting standards, and surprisingly, these 10 new accounting standards are issued not by the accounts department of the government, but the tax department. Can you imagine? The tax guys have left tax behind and now they are moving into accounting. And all they are saying is that, hey, if you do your accounting properly, we can do our tax properly. So in effect, what is happening is that while we are supposed to follow Ind AS or IFRS or whatever the case may be, when we are complying with, let's say, Companies Act or any other regulation which forces us to report our financial statements, but now the income tax department is telling us that we need to follow tax accounting standards when we file computation of income or our tax returns. So what does it mean? It means that once you finish your accounting, auditing, once your auditor certifies your books of accounts, you are done with one set of regulations. But the moment you go on to filing your tax returns, you will have to do the accounting of all your financial transactions again in the format prescribed by the 10 key ICDS issued by Income Tax Department. That's bad news, worse news, worst news. I don't know. But let me give you silver lining to this grey cloud. The silver lining of this grey or black cloud, ladies and gentlemen, is that these 10 standards are very simple. These 10 standards are almost 100% similar to the standards which we are used to follow since the year 2000, which are now popularly known as previous Indian GAAP or Indian accounting standards, which were issued by ICAI back then. So this is the first step of Income Tax Department to streamline their computation of incomes from a rule-based system to a principle-based system, and that they have come up with 10 new accounting standards. Let's not take this as a bad news, but let's take it as a positive first step by Indian government to rationalize the tax provisions in line with accounting provisions. We are hoping for more positive changes coming our way. For now, please remember ICDS, which stands for Income Computation and Disclosure Standards, are mandatory from this financial year, and they are very easy to learn. There are only 10 of them, and most accountants are already aware of what these standards are. So all it takes is one plain reading of the bare standards for you to upgrade to ICDS. Not very in-depth training is required. However, for more details on ICDS, Ind AS, IFRS, and many such topics, stay tuned to our channel. And if you have still not subscribed our channel, subscribe now. Finance Tube. Accounting rate of return. Yes, this is one of the methods of evaluating projects. Now, what is target rate? Target rate or cutoff rate could be your cost of capital, or could be a desired minimum rate which the management would like to achieve.